Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap. It is Thursday. It is May 9th. The volatility is still very much out there in the market, as we saw stocks gap down pretty heavily. A lot of selling in the futures market, rallied up pretty strong throughout the course of the day, closing still in the red, but it certainly was a nice bounce back day, as really the market is still, it's still not comfortable with this trade war stuff. We will see how we adjust to it here tomorrow. But right now, like we've talked many times before, right now we should probably continue to expect this volatility to continue until we get either used to it or some resolution. So, and good afternoon, Ed. Hello, Patricia. Hello, Micah. Welcome out, everybody. Great to see you as always. Hope you had a great day, both in and out of the market. Pretty light on the earnings front here going into tomorrow. Booking. Cemetex reported, actually had their CEO step down. The stock was down. SYMC was down like 15% after the news of their CEO stepping down in the early aftermarket hours. Win reporting here tonight as well. And then Viacom here tomorrow before the open. So not a particularly busy earnings evening or morning tomorrow. But still a few out there, no doubt. And hey, Michael, good to see you, my friend. Hope you are well. Taking a look at the S&P 500, really big gap to the downside here this morning. And it looked early like maybe today was going to be the day. I mean, we were pushing through the 50-day moving average at that point in time, started to sell off. But as you can kind of see, kind of spent a little bit of time reevaluating things, I suppose, and really spent much of the rest of the day kind of slowly grinding back to the top side of things. Now, we're not out of the woods yet. And hey, Scott, good to see you, buddy. Most of our intraday day or hourly charts on the S&P, on the NASDAQ, on the Dow, and even to a certain extent on the RUT are kind of in hourly retracement, bearish retracements. So we're seeing some fighting back, but during this pullback stretch, one thing we've constantly seen is, we look at it maybe on an hourly time frame, we continue to make those lower lows and lower highs. So we're still got some work to do. Tomorrow's not going to be the day, in my opinion, to run out and buy things. Even if in hindsight it ends up being the day to do that, it'll do that without me. But a good bounce back day, and definitely a needed one, because of course we know the Dow Jones has already given out on its 50-day moving average. We gapped right below that 50 on the S&P 500, worked right into it on the NASDAQ, but the close is the close, right? And this is a pretty bullish candlestick, honestly speaking, when we look at this from a daily perspective. Big hammer closing back above that 50-day moving average. So a lot of solid movement. What, from a buying perspective, need to see some follow through. I still am not, I'm probably like most traders, not 100% sure about anything right now with the volatility increase in the market. But overall, I still am looking at this for pullback opportunities as we now get into next week, because tomorrow, it's not, I need more confirmation. And the last thing I'm going to do is make a bunch of new bullish trades on a Friday and have to think all weekend long about that. No, thank you. I'm supposed to be having fun this weekend. So, but we'll see where we go. No upward movement yet. We've not been able to take out that previous day's high all week. So really haven't been any great daily signals for bulls out there, but a pretty good bullish candle. But we have to keep in mind, this thing is kind of walking on eggshells right now, right? And that's at least the way it thinks it is. So not anything really to see here, but I do think you have to give a little bit of a win to the bulls being able to reclaim and hold that 50-day moving average at the end of the day. So not enough for me to run out and want to buy, but I do like that candle. I won't lie, I do like where we're at on the S&P. Price looks interesting. The candle looks interesting. The overall market conditions, well, we all know what they are. and it's volatile to say the least right now. So we'll see if we can get some upward movement. If we get a close below the 50 tomorrow, I think that's going to have to give us a little bit more of a bearish bias going into next week. But we'll see if that 50 can hold. And hey there, Em, and hey Tanner, good to see you, and hope you guys are doing well. And hope the little one's doing well as well, Emily. I know you probably haven't slept a lot for the last couple of weeks, so but probably worth it in the end. So over in the Dow, same hammer candlestick. So we did see a lot of, buying momentum off of those lows. We look at that in a bubble, that's a good candle too, but we have to take other things into consideration. Like we've talked for the last several days, this is the index that right now at least concerns me the most. Now we're seeing drift down from that break of that 50, that break of that old resistance zone, with the 200 not terribly far away from where we are. That should kind of potentially be a support catalyst. That's going to line up with this general ballpark of these swing lows that we set up back in March. Not the index that I'm going to want to run out and buy. Again, I'm not going to want to run out and buy anything tomorrow, but certainly if I am, it's not going to be the Dow Jones. Want to see how we react when we work back into this resistance zone, because all of a sudden the Dow that was not that long ago above all of its moving averages, breaking through resistance, not a lot until its all-time highs. Now all of a sudden we have a falling 9, that 20 starting to creep down. We're below the 50. Definitely seeing some signs of weakness there right now in my mind, and definitely the weakest looking index chart still. Over on the NASDAQ, worked right into that 50-day moving average here today. So this could have been a much different conversation, and it might be tomorrow with the volatility, but we were knocking on the door of breaking this 50-day moving average as well here today. Ultimately, buyers came in pretty nicely off of that average, closing us, on a nice bullish candlestick, pretty decent body on this candlestick over on the NASDAQ as well. Tech continues to be the area that I do find the most interesting for the pullback, much like yesterday. Things are getting a little deeper, these 50-day moving averages. Once we get below those, I start to, I'm not much of a pullback guy will we get that far in. Still waiting for any sort of signal to the other side, just like the S&P, just like the Dow Jones. You look at this on an hourly time frame, and it looks like a textbook bearish retracement, right? So want to see how this happens. For a momentum change, or at least a potential momentum changer, I think we can watch to reclaim the 20 to get this 9 hourly back working back up and starting to act as kind of a support catalyst. So we're not there yet, very well may not be there tomorrow, but that can be our first sign that maybe the buyers are willing to come back into the market. And over in the rut, interesting day over there as well, breaking support on the intraday, rallying off of those lows, closing back above that support level. So, you can look at today probably like everybody else is. Volatility is the name of the game. We have some wins, coming off those intraday lows, pretty bullish candlesticks, hammer candlesticks or textbook bullish candlesticks, support holding on the rut, 50-day moving average holding on the S&P. But on the other side of it, we did breach the 50-day moving average on the S&P. We did breach that support level on the rut. So still a lot of mixed signals. I think right now we want to continue to be very, very careful. For me, my opinion is let it play out tomorrow, see where that puts our weekly charts at the end of the week with this increased volatility. I'm not really all that jazzed about new swing trades tomorrow on a Friday in a volatile market. So I'm certainly a wimp. You guys know that, but I don't expect to do a whole lot of new things tomorrow. That's for sure. But I do like the movement that we saw. That is a step in the right direction. Now let's start to reclaim some upward movement on that hourly time frame. Then maybe we can start talking. So that's where we find ourselves from a broad perspective. Not going to be tremendously different. You guys know this isn't your first volatile market. You all remember the good times last fall. So many things are going to look basically the same, right, during volatile markets. Over in XLB, though, holding that support zone could be an interesting price area as we're looking into next week. Again, we've got some negativity in the form of, breaking support, breaking below those averages. And hey, Marie, hey, Jasari, good to see you guys. This is an important line. We've brought up the weekly a few times. I think it's worth doing it here again. This would be the daily or the weekly swing low, and the 20 weekly average as well. This, in my opinion, is a pretty important price point over in the material sector. Did hold up here today. I can understand from a risk reward perspective, this being an intriguing area. I still think you want to be looking at things are holding up better versus things that have pulled back deeper in a volatile market. That is, my opinion. Sometimes it makes me look really smart. Sometimes it makes me look really dumb, but that's generally the approach that I like to take nonetheless. Very important. If we close below this, we're going to have to start thinking that we got some issues maybe beyond just the spike in volatility, because hey, this didn't all start with the volatility. We were seeing a little bit of sidewaysy weakness before this volatile week really kicked off. So I think this is an important price point moving into tomorrow over in the material sector. Some of those areas are going to look interesting, but I think for the most part, they're going to look a little weaker as a whole than I would like them to. I'm going to, I want to like this pullback, and I want to really trust the area that I do look into if and when the opportunity talks me into it. And hey, Lorena, good to see you. Over on energy, if we can get a little more time, within this, and again, tomorrow could completely destroy this conversation, but if we can spend a little bit more time within this trading range, I think we're going to start to be able to kind of think K-trade. We still aren't there yet in my mind. For anybody who's not familiar with K-trade, basically it's just, if this breaks to the downside, that's a sell signal, go short. Breaks to the upside, it's a buy signal, go long. That's all that it is. You want to have a really decent range, I think, and so I need a little bit more time to develop, and we very well may not get that. Right now, we are building a nice little support level at this old short-term one-day support level. Really, the major level is at 62, in my opinion, or at least a much stronger level. Just kind of consolidating below this, recent breakdown point at 65. You guys know where I'm at here. Definitely not a bull from that point of view. Breakdown would be another bearish signal, in my opinion. A break up, could kind of put us back into that neutrality conversation. So not a particularly great area in my mind right now, but that can change if we spend a little bit more time in this little week-long dance that we've kind of had between the breakdown point and that one data point, but it matters, of support. Or in the financials, really nice bounce back day. They did, of course, with the gap down here today, really kind of falter below that 27. I want to, or that, this 27 and a quarter range, this old resistance. I'm definitely going to want to see it reclaim that before I get, too excited from that bullish point of view. From the bearish side of things, I still feel like there's better areas out there as a whole, at least. Some of these things still have some support that is holding up. Still like this area, and if this is just a pullback, and I do still believe, and keep me above the 50-day, and I'll probably keep saying this, I still believe that that's what this is presenting us. This continues to be an area that I will like, but I will feel a lot better once we kind of reclaim 2740, 2750 or so on this ETF. But a really decent day. It really was a very solid bullish day, as this was one of those areas. I mean, that was what the market did, but seemed like there was a little extra conviction over in the financials. Over in the industrials, we're sitting right on that old support level at that old resistance zone at that 75 marker. Again, the problem I always have personally with deeper pullbacks, whether it's volatile or not, is on the deeper pullback, lots of stuff is in my way, is scaring me. Now I have to worry about 77 all over again, and I have to worry about these different moving averages. I think you kind of have to be careful overall, broadly speaking, but I'm seeing kind of the same things over in the industrials. Reclaiming 77, I'll definitely give a win to the bulls if that happens, but I think I need to see that happen at this point in time before I'm too terribly excited. This area in particular, I think was one of the areas that was kind of hit the roughest technically this week with the selling. Makes it a little less appealing going into, say, next week. Back above 77, I think we can talk. We do have some support here at 75. If this gives out, realistically, there's just not much. There's room in my mind to the downside, honestly, in the industrial. If we continue to sell, if we do take out this support level, we really don't have price action for a couple of dollars, which on the ETF is still a couple of dollars. But when we kind of think about the individual components, that can be some room. So quite honestly, if we continue to sell and give out at this 75, I honestly expect this might be an area that's a little more intriguing, short term from a bearish point of view. It's going to need to give that out first, but I do think it's worth keeping an eye on that 75 area on this ETF. Still really like the tech pullback, still my favorite pullback area right now. Probably a little bit ahead of discretionary and staples that are kind of tied for second place. Hey, Jimbo, good to see you, buddy. Holding that 50-day moving average, nice placement, right? A little bit of upward movement puts us right back on top of those old highs, which at least for my trading rules, I need one more candle. I need tomorrow's candle to be bullish, to be thinking about pullback opportunities anyway. Wouldn't mind just kind of sitting in this area. I think that's probably honestly asking too much because volatility is going to need to die down immediately to sit here for a little while. So probably a little overly optimistic in that. But if we could kind of sit here for a little bit, let that 9 come back down to us and then start to see some bullish signals to the upside, it could be a really interesting pullback opportunity, say Monday or Tuesday of next week. I expect that my pullback list is going to be pretty tech heavy as I go through my scanning here tomorrow. Again, just like everything else for me, we have some bullish candles, but no confirmation candle. And while I think you should always have a confirmation candle, I really think you should have a confirmation candle in a volatile market. Personally, so but very much like everything else, coming off of the low today, making sense at that 50-day moving average, reclaiming this breakout point, which is going to kind of have to happen by breaking out of today's high, would be a nice step, I think. So I mean, I know it's too much to ask, and I have no hope that tomorrow is a dull day in the market, but I really hope it is. I always say that for Fridays, right? That's pretty normal. So yeah, well, in a pullback, I mean, really, there's two methodologies, I guess, primary methodologies, Jimbo, that would either be, a close confirmation candle. So, we need to basically close, make a higher high and a higher low, basically. So, this would have been one back here. We pulled back, and then here was our confirmation candle. We made a higher high and higher low. Basically, we reclaimed an intraday upward trend. Right, that's what the intraday is going to look like on some level. If today's high is higher than yesterday's, if today's low is higher than yesterday's, that intraday trend is going to be pushing to the upside. So that would have been, a pretty good example. It's a little bit more conservative, but that doesn't necessarily make it bad. The other methodology is to use something, some sort of, percentage type of number, i.e. 10% of an ATR, 20% of an ATR, whatever it might be, above the previous day's high, kind of thinking, okay, well, if I have my order in above this high, if it goes above today's high tomorrow, then what is currently today's low appears to be support. So that's going to give us more control, give us a faster entry, but at the cost of less confirmation. So it really, a lot of it's going to come down to your personal rules and how aggressive versus how conservative you want to be. I err on the side of the conservative. I don't care what I miss. I care what I get, what works out, right? I care if I get the good clean entry with the good confirmation. If this takes off and runs up to $78 tomorrow, I'll cheer for everybody who's bought it. But and I'll just say it wasn't meant to be, right? So and I'm perfectly comfortable with that. I really like getting a confirmation close personally, but I know that everybody's rules are going to be different. But hopefully that gives you some ideas there, Jimbo. We can, use some hourly things as well, like Coach Mark does. It, when it closes above the, hourly 9, hourly 20, hourly 50, we can use some intraday moving average stuff as well. So those are some fairly common methodologies. I think it's most important that you're consistent, when it comes to this stuff. I don't think that necessarily one has to be inherently better than the other. I just think one fits better for you, whoever you are, than the others. And it's important to be consistent in how you're doing things. You can't be aggressive on a Wednesday and a big giant wimp on a Thursday, right? So we want to see some movement. So yeah, so the second candle movement followed by, and this maybe not be the greatest example because we had some resistance, but this would be a good example, Jimbo, where we created that higher high and higher low, got the confirmation candle, continued that momentum the following candlestick, getting into the trade at that point in time. And in this case, it happened to line up with some resistance, of course. So we'll see, if we get a confirmation candle tomorrow, I'm going to like this area, as the pullback zone for next week. I have my, I don't have a lot of belief that I'm going to get that candle tomorrow necessarily, but that's okay. I wouldn't, it potentially will, or it potentially won't, right? My job isn't to make it happen. It's just to be ready if it does. So hopefully that gives you some idea there, Jimbo, some things you can kind of think about from an entry perspective. Over in the staples, working back into support, right in this nice little range. It's messy right now, and it's not quite as pretty as it was a few days ago, maybe, but I still do like this area from a pullback point of view, as long as we're holding this support level. If this support level gives out, then we're thinking about working back down to a 50-day moving average or something like that, and I'm going to have some concerns from a pullback point of view. Still think it's hard to want to go ultra bearish, even if we break this support level, which I would call it a sell signal. I'd have to. If we fail our recent swing low, you have to, in my opinion, you have to say that that's a bearish signal. Tradable or not is always, a different story altogether, but this is an important price in the short term, at least. If this gives out, there's just not a lot to prop this sector up until what I would guess is probably the 50-day moving average. So we do have some downside room in here. So if this support zone doesn't hold, probably not looking into the staples in the short term. I do expect it to try to hold, but if we're under heavy pressure with a volatile market, it's a lot easier to give out. So it's a lot easier to give out. As Coach Mark says, volatility is the hardest thing on technical analysis. It's most easy to recognize that when we say don't hold through earnings, because earnings gaps will destroy your charts, right? Bullish or bearish because of the volatility. Well, some of the same principles I think apply just on a market level. When the market gets more volatile, if the market's going to sell a whole bunch tomorrow, the S&P, the NASDAQ are both going to lose their 50-day moving averages. It's just, if the market's down another 2%, that's just probably what's going to happen, right? So it can kind of mess with your technicals. Speaking of your technicals, we tried to break down early on the utility sector, closing right at a doji at that old breakout point. This chart is really interesting, from a talk about it point of view. A doji at support, upward movement, that could be a confirmation candle as soon as tomorrow if we wanted to buy off of this support. We all know how long we've been trading between 57 and approximately 59. That's not my style of trading, really, but that doesn't mean it's not yours or somebody else's. Upward movement, hey, this really is a very easy risk reward equation, right? Buy it at approximately 57 with the stop. Now we have even an idea to put the stop below today's low if we were going to do that, betting that the sideways nature continues to hold. I don't really love that idea right now, and that's generally not my style of trading personally, but I do understand it. If this gives out, though, now we've broken on the intraday. We're still sideways as of today, in my mind at least, but if we see some more downward movement, we kind of talked about yesterday, there is room to the downside in the utility sector. There's really, just because of how it's been moving as of late and what it's been doing, there's just not been a lot of opportunities to develop any real support between that 57 where we're currently hanging out and this 55 down here. Yeah, this was a pretty good ceiling, back last year at around $55, but we don't have a lot of history of stuff in between. So I would be concerned from a bullish point of view if we do give out of this 57. Now, I don't think that's happened today. We did breach it on the intraday though. There's no doubt, but the close is what I will be looking for that confirmation. I will be concerned and will expect some bearish movement if that does give out. There's just not a lot of support till 55. There's a lot of support at 55 and a lot of old resistance, 200-day moving average, but between here and there, I mean, there's just not a whole heck of a lot. This is an interesting one, maybe actually interesting if it does give out. On the other side of it, again, if we want to buy into utilities, I mean, buying at support's never the worst place to buy, right? But I think for me, at least, not something all that interesting. So absolutely it is, Jimbo. And it comes, and probably a better way to put it, it comes more naturally. You can easily say, okay, well, from now on, I'm going to buy if it breaks resistance and closes for a day, right? And you can implement that rule. It's very across the boardy, right? Whereas management can be a little different. Sometimes you're going to use the previous day's low. Sometimes you're going to be using a particular moving average or an intraday chart for previous support zones. So yeah, there's a little take more getting used to, I think, on the management side. Over in healthcare, again, I just need another day. I need this weekly candle before I have any opinion right now. And even as of right now, if it ends right here, it's still going to be a little bit tricky. But I'm really interested in how it performs, where it closes with these moving averages in this old low that we were able to push through last week. So this one is a stay away from me for at least one more day. I want to see this weekly candlestick before I make any opinion, honestly, whatsoever about this sector. It is just, I've said a few days in a row, it's just in a really weird spot. There's a ton of different conflicting things, breaking moving averages and failing moving averages, a bunch of stuff up on top of us. And you can even see in that weekly candle, very, very doji-esque in the candlestick. So for me, the only thing I'm really comfortable saying is our resistance zone is at 91 right now, or just shy of 91 up here. If I'm looking at support, I mean, we could maybe look towards this 87 at 50 ballpark, somewhere in this general range as a support zone. But quite honestly, I'm not interested in any pullbacks in healthcare as of right now. Very weird chart right now. And when it's weird, and you may not think it's weird, you might have a great read on it, but when you think something weird and don't have a good read on it, don't be afraid to say, we'll see you tomorrow. We'll see you next week. We don't have to be it's not about what we don't do, right? It's about what we do. So over in discretionary, another area I do like from that bullish pullback perspective, although I do think I like tech a little bit better. Very similar to tech here. I'm going to at least need one more day of confirmation. Reclaiming that 118 breakout point would not be a bad thing. Either from a bullish perspective. Again, for the easiest way I think this pullback comes together is if we kind of do what we've done on crude over the last couple of days, where we kind of just go into a little bit of a trading range and then look to come out of it a few days down the road with market conditions. Again, I think that's a little optimistic to hope for that, but we can always ask, right? So I'm looking at the 50 here, kind of as that support level. This should be a pretty interesting support level too. If we try to give out here, we're not only taking out the 50-day moving average, we're kind of knocking on the door of an old support zone. We don't have too far to go before we work into this old breakout point as well. So lots of little things to prop this sector up, but there's also some space, to work with it. And there is a little bit of room even from where we are, into our next, in my opinion, real support level. So it's an area that I don't think we want to get too crazy. I don't want to be the first one in anywhere, but really on a chart like this, I definitely don't, because there's still quite a bit of room to the downside for a pullback to, at least in theory, still be in play. Over in the REITs, caught a little bit of a footing here today, trying to use the same old zone again. I still think that REITs right now are more sideways than anything. I still think you have to give them a little bit of a bullish bias simply because of their longer term chart. But as of right now, like I've said, probably too many times, you either believed in this pullback a couple of weeks ago and you're here, or you didn't, and you're probably like me in this little sideways, let's let it figure out what it wants to do dance. And certainly nothing changed here today. If this little support zone does give out, though, there is a little more downside room within this space as well. But right now, I think you're just looking at this as a messier version of what we've been seeing the last several weeks over in utilities, pretty much still sideways. This is the important zone in my mind, this 34.75. If that gives out, we can start talking on the bearish side of things. If we break out, well, certainly that's always a bullish opportunity if we want to take a closer look at it. But I think here today, still very, very sideways overall. And lastly, communication services, another one of those pullback type of areas. So as you can kind of see, just looking at the different charts, some of them are just, the sectors are just going to naturally look better to you. And I imagine some of you guys agree with the ones that I'm more drawn to from the pullback perspective. I imagine some you like better than I do. And it's not about necessarily who's right or wrong, but at least it's kind of guiding us into areas that we might want to take a closer look at if we are looking to trade this as a potential pullback at this point now, for me at least, next week. So, but a little bit more drift to the downside. We've got our 50-day moving average. We still have a lot of 50s. Once these 50s start giving out, then I'm going to start to have some real concern. But some areas they've clearly lost the battle at the 50. But I think at this point in time, we still have enough things still holding trend, holding support. I still have a hard time saying I should be bearish. I have no objection to say I should, be neutral. I should go hedge my portfolio. I should sit it out. I have no objection to that. I still think it's a little too early to say we have clean bearish signals. If we're going to get them, we need some sort of a rally from a broad perspective. So basically we can put in that lower high or fail. We need some buying to happen. Then we set up a lower high somewhere in here and then start working down. Then we can start talking about actual bear signals. Right now, I think for the most part, more of the things we're seeing are sell signals than real bearish signals. Again, if it wasn't for the spike in volatility, it would probably feel a little easier to say that. But of course, whenever volatility spikes after a nice, long, boring stretch, it's going to get our brains working a little bit, our blood pumping a little bit more. We were really spoiled in April, right? So just be a bull and you're in good shape. So that's where we find ourselves on the sectors. Again, much like yesterday, those pullback opportunities still exist out there. There's still going to be plenty of bearish opportunities out there. And I think right now, we are very open to both sides of the coin. We just want to make sure, as always, we want to make sure we're getting that confirmation. We don't need to be the first one into the pullback. At least I don't. Everybody can be in there first, as far as I'm concerned. So that's where we find ourselves after a spike on the VIX here on the open, with that gap to the downside. That's going to do it. We did move back down, but we're still certainly higher than we've been for most of this year now. So volatility has not gone away. I wouldn't read too much into that. We came off of the high today on the VIX. Right now, as again, I expect to be volatile until we're not anymore. So I still think we have to, whatever that means, for some people, they just stop directional trading when volatility spikes up. Other people, they start day trading. Other people start looking to sell credit spreads. I mean, there's not necessarily a right or wrong answer, at least in real time. In hindsight, there's usually a better answer, right? But I think whenever we see a spike in volatility, we kind of need to go into whatever that might mean for us. For me, that typically means get real defensive, get real cautious, not overreactive, but start thinking about in the case of going uptrend to downtrend, kind of where my head's been is building into bear call out of the money spreads, adding a few of those. So that's kind of where my head's at least currently, because I still don't think we have enough reasons to believe that this is the beginning of a bear market. It very well may be, but I don't think the technicals back that up. We still, for the most part, are seeing more pullback signals, I think, than turnaround, bearish signals. But again, that can change in a pretty quick with a volatile market. So yeah, no problem, Ed. So let's kind of work through and then we'll hit that up. Yeah, no problem at all. But before we do that, let's go take a quick peek here at the dollar. Just continues to bounce. It's one of those things, again, whether you have, the swing low down here, the 50-day moving average, The break, it broke. It's trying to hold that break. I don't think there's any clear trading opportunity on the dollar. As you guys know, I'm looking at the break of those 2 weekly candlesticks as the confirmation that there's more, that this breakout's ready to potentially move. And that is what I am watching for personally. Above the 50, I still think it's hard to get too concerned about the dollar. Just doing that little sideways dance. I would like it better if it was doing it right on top of that breakout point instead of right below that breakout point, because that was a very important number, right? And I really have a hard time wanting to be excited until we at the very least reclaim that. But I really want to see it reclaim the highs from the last couple of weeks, at least the body of the 2 weeks ago's candle and the top of last week's. And I'm, again, I'm patient on these breakout trades. There's no reason not to be. Over in gold, just kind of a day, continuing to kind of bump into that same general resistance zone. That 50 continues to fall, getting a little bit of intraday support off of that 9, which is trying to turn from moving down to moving up. Still an area that I don't understand why anybody wants to be trading gold, whatever side of the coin they're on, bullish or bearish. Does not seem like a very tradable area from a swing trading perspective. I mean, obviously there's definitely movement intraday, and I get that side of it. Right now, again, nothing really has changed. Support down here at these recent lows at around 1267, and resistance for me is going to be this trend line, which hilariously is going to put us right back above 13. It took a while, but I think 13 is important again on gold from a bullish point of view. We do have a little bit of resistance here that, of course, we're fighting with right now. But even if we win this fight, we've got to deal with the 50. We've got to deal with this falling trend line. Just not going to be something that I want to fight. We come out of this range either way, and sooner or later we will. Then maybe we can actually start to be looking for some clean signals. But very messy chart continues to be. Over in silver, a little more downward movement here today as folks finally got a little bit. I know that some people were looking at it from a retracement point of view. Finally had some follow through, finally took out the previous day's low, if nothing else. A little more selling over here in silver than we saw in gold. Gold actually closing up a tiny bit, whereas silver closing down 0.5%. Really not a lot has changed. Still think you have to look at it as bearish. I still don't think it's a very friendly swing traders area either. I do think it's more friendly than gold, but I still don't really like it all that much. The 15, I think, is very clear, the number that we're looking at as our primary resistance at this point, and our support level going to be down here at this recent low. So I imagine some people have already built in 2 bearish retracements because this did give them that opportunity. I don't really love it, still don't really love it, but I would lean to the bear side. If I were going to do anything, I'd want to be on the bearish retracement than trusting this support. 15, we have to reclaim that, I think, before you can even start talking from a bullish point of view, for me at least. And still beyond this, if this support level does get taken out, we've got a little bit of room to our next level at about 14.5. So continues to overall be pretty bearish. But again, like we've talked many times and we've seen it day in, day out, it's been a little back and forthy. It's not been very, well behaved. It never finds a way to reclaim 15, but it always seems to find a way to be knocking on the door. Over in natural gas, just still fighting that fight at that resistance zone. This is certainly a short-term potentially area to be keeping an eye on, in my opinion. If you guys know I wasn't looking at this bear pullback, but if I were, my exit would be, a little bit above these highs here. So I think this is an important price from a resistance perspective. A little more selling here today. If you're in, I understand why you're looking at it from a pullback point of view. I don't agree with you. I don't think it broke down. And so I don't think if it didn't break down, I don't think that was a retracement opportunity, but I do understand. And so you're probably here, if you're like me, you're still waiting, to me, it's just still very clearly battling. And, it's going to do stuff day to day, but it's still very clearly battling at this long-term support level. And I'm not gonna, if I had to do something, I'd bet on it holding. I know I'm probably in the minority in saying that, but at least from people I've been talking to. But if I had to trade it, I would go bullish on it, bet on that support level holding. Now, thankfully, I don't have to do that. So, because I wouldn't feel very comfortable with it, but I don't, again, we've talked about it a lot. No need to beat it to death, but I do think that it is not cleanly broken down yet. And then lastly, over crude, very nice day. One more day, and then let's get into next week. Continue to go into this little sideways range. We're pinching down on our moving averages. That 9 is getting a little bit lower. Continue to hold that 50 and that 200. One more day, and then let's kind of get into next week if we can push through. And really, you could argue either way. I'm looking at it from a bullish perspective. If we can kind of push through, and if we kind of start, pushing back above this hourly 200, that's going to be showing some upward movement on that daily chart. That could potentially be a bull pullback. I know we've looked at the weekly. We'll peek at it really quick here. If this is where the candle lands, and this is, what we wanted on Monday when we had this talk, right? Here we are on Thursday, one more day. This is going to look an awful lot like a bullish retracement. Little upward movement next week could be an interesting short-term opportunity. Now watch it break support tomorrow and completely take that away, or everybody buys it and we close at 64. So we'll see. But we do, this is what I want the market to do for a couple of more days, especially on those pullback areas that I'm looking at. That would be preferable if it will do that. I have a lot more faith that we can have this talk on crude tomorrow than we're going to be having it on stocks, though, with the volatility that we're seeing right now. Want to reclaim that 9. So again, one more day. Closing would be ideal in my mind. Show some upward movement some point early next week. Get us that higher close type of a deal. Close back above that 9. Get that guy working for us again instead of working against us. Could be an interesting pullback area in my mind, at least. That's how I will be looking for it. On the other side of it, while I'm not really looking at it from this point of view, below 60, I think you have to take off some bullish lenses. Whether you're full on bear or not, I don't know that you need to be a full on bear below 60, but I do think that would be a pretty clear bearish signal. And I honestly think this one could go either way. I think it's a little more likely that it is a pullback than it is a breakdown, but not nearly enough that I would dare buy it right now. But I do love that we're building this little floor, little ceiling, little range, getting crunched down here on the 9 EMA. If we wanted a pullback opportunity, I really don't think we could have asked for a better week, quite honestly, in crude. It's done about what you would want it to do. Hopefully tomorrow, green candle, same tops, upward movement on Monday to give us some confirmation. So that is where we find ourselves after just another volatile day in the market. And again, the big takeaway, whether you're looking at things primarily bullish or still bullish or more bearish, no matter what side you're on, well, as you saw today, volatility, you look like a genius early in the day as a bear, look like a fool by the end of the day as a bear, and vice versa, right? So volatility is here. Make sure that you are respecting it, whatever exactly that means to you. It's not gone yet, right? It may be going away, may be here for a while, but it has not gone away just yet. Ed just brought up kind of the daily routine. So yeah, absolutely, Ed. So from here, where I'm going to go is now I've kind of got that opinion, if you will, kind of what I like, what I don't like. That's going to give me a better idea of how I might want to manage any existing positions, right? If a bunch of things are closing below the 50, that's going to change how I would manage versus if they're not. Right now, I know they reclaimed the 50, which is not a bad thing in my opinion, but that's going to kind of be where I start, right? And then I'm going to kind of go into the watch list, kind of find things that I want to trade. Now, today's kind of a bad day because I don't want to trade anything tomorrow. Literally, I don't want to move into anything new. I don't want it to be crude because I need one more day in this range. I don't want it to be the market because I need a confirmation candle. Even bear plays in the market, I'm comfortable with where I am at right now, and don't really generally love to make new trades, swing trades on Fridays anyway, but I'll go through, that process, what areas might be interesting to me. hey, let's go take a look. I know yesterday we went and looked into the tech, things like Microsoft, still in a pullback opportunity in my mind. Adobe, still in a pullback opportunity. So just go into the areas and kind of get my game plan for the trades, right? And so if it's in a position that I can actually get the order in, I will. If it's not, like currently, as I need a close for confirmation, then of course I won't do that. So basically, ideally tomorrow morning when I'm waking up, what I'm doing is doing a quick just double check of the broad market, not really reevaluating the different sectors, gold or anything like that. This work is supposed to be so I don't have to do this till tomorrow afternoon. That's kind of the thought process I have. It. So tomorrow morning, I'll go in and I'll check the futures, see, particularly on the indexes, most notably the ES, but certainly on the Dow, the NASDAQ, the RUT too, just to see, if anything substantial has happened, right? This week we saw a lot more substantial, overnight moves than we saw, in of course April and throughout much of the course of this whole year. So I've already got my bias, I've already got my game plan, right? Game plan. I'm looking at a pullback opportunity. If I have things that are ready to get into, it's just in this particular case I don't. Those orders are set up and ready to roll. So it's just going to be kind of a quick view at the futures. Most days it's not going to be enough to mess with my head. Now today, if I had any buy orders today, which again I didn't, but if I did, I'm gonna look at the futures market and the S&P has gapped or has broken below the 50 SMA. Immediately, I'm going to kind of reevaluate because I need to pull off some of these. I need to reevaluate those bullish positions, right? I'm not trying to find a trade tomorrow morning though. I'm trading anything I found tonight, tomorrow. I'm not looking for something at 7 o'clock in the morning while I'm drinking my coffee or anything like that. So that's where I'll start. Then what I personally like to do is I'll just do a quick run through of the companies that I throw up that have have earnings. I throw them up over on the Tackle Trading Twitter. And so I'll just do a quick run through, see how they're performing. I mean, some days I won't go through all of them because in the middle of earnings season, I tried that last quarter and it about killed me. I was, trying to tweet out everything, all the movement in the pre-market. It about killed me. I was getting up at like 5 in the morning to do it. And it was fun for the first 4 days. And by the end of the earnings season, I was like, no more. But I'll jump in, see if anything's really catching my attention from that point of view. I like to look at things that are, moving on earnings if they're moving into major levels of resistance or support. Most days that is not happening though. But on the days that it is, that's my favorite way to look at things intraday is gap up or down on big news. It works into support or resistance. It has to make a decision right there and then because the market's opening up. If it breaks through, we've got the news behind us. We've got the momentum behind us. Now we have the technicals behind us. So that's just part of my personal routine because I like that. Some days, like I said, some days it'll be more than others, right? Some days I won't make it through all of them. Some days I might not even make it through any of them, although I usually do go through that. I'm just high leveling it, I guess for my morning routine. Market kicks off here at 7:30. And so while I'm up, I have not been up for a tremendous amount of time. I'm not to be trusted making a whole bunch of brand new decisions be that early as I'm still drinking my coffee. So that's kind of the process that I will take. I hope that tomorrow I'm not doing anything in the morning. I'm hoping that I look at the futures and, it's not a big move one way or the other. There wasn't some crazy, overnight movement. My trades are already set up or my entries are in place or my alerts are set up if I'm looking for a certain price. And just it's a quick browse. And I do mean quick, quick browse. I'll go to CNBC. I like to look at the pre-market movers if there's a huge story, but I'm not a newsie. I like don't mind news on individual stocks, but I don't like to take a macro view to today's trading. I don't think that makes sense. And it certainly doesn't make sense for me. And so I don't get too hung up on the news, but I just try to kind of catch up with the story, Ed. So I try to make it as basically lazy as possible, for lack of a better way to put it. I do hope that gives you some ideas, but I believe, and again, everybody's different, but I know that I do my best when I'm doing it right now. Well, it's just really chill. I'm talking it through with my friends, with other coaches, with my dog, putting together the game plan. don't feel rushed. I can really think about where I should get in, or if I want to get in, and then just let it be. I'm not a micromanager or anything along those lines. I'm fine getting in, right on the open. Personally, Ed, if the signals are there, if I get that close, if I get that confirmation, whatever I'm looking at, that confirmation candle today, and I get that movement, that 10% ATR movement to confirm that, I don't care if it happens at 7:31 or 10:31. So personally, no, I don't care if it's, end of the day. The only real caveat is I don't like to do new things on Fridays, especially Friday afternoons. But that's more of a just kind of a me personality thing than really any great logical reason to give it to you, but yeah, I'm fine with setting it up. If the chart's there, could all of my charts look something along the lines of this? It closed above resistance. If it continues that movement, my definition is 10% of an ATR tomorrow, then it's confirmed the breakout. And so for the way I like to trade, I've already got the confirmation. I'm just looking for the follow through, if that makes any sense. So maybe that changes the way that I look at it. But that's how I go about this stuff. I'm always the work I do today is so I don't have to use my brain. Tomorrow, I'm going to meet with a couple of our new team tackle members. I'm going to spend a good 3 or 4 hours scanning the markets. I don't want to have to feel like I can't do that type of stuff. I might, not tomorrow. I don't do that on tomorrow, but on Thursdays, I go out to breakfast. I always want to feel like I don't have to be a slave to the computer. Even though I'm around my computer most of the time during the market day, I don't like to feel like I need to be. So I try to get everything done tonight. So tomorrow it's autopilot. It'll be what it is. If it hits my stop, or if it hits an alert I set up for whatever reason, great, I'll go in and deal with it. But tomorrow morning is just basically to make sure nothing has changed dramatically while I was asleep. And for me, tomorrow morning at 7:31 or at 8:32 or whatever price, no problem. Now, if I'm thinking about an intraday trade, if I want to intraday trade, I do usually like to let the first 15-minute candle develop. So although I do not do very much of that anymore, it's only a very rare occasion that I do that. Usually when something's trying to break out on earnings, which is rare. I only usually find like 2 things that kind of fit the bill each quarter. So those are few and far between. So hopefully that does give you some ideas there, Ed. That'll, of course, do it for the market recap here today. One more day. We'll see where we close out here on Friday. Like I said, right now, it's, I think the right approach is to be following the rules, being cautious, respecting the increase in volatility, because it is here. Whether what that means to you can change dramatically. Some people are loving it, some people are hating it, right? Depends on who you ask. But I do think respecting it is the right way to go about it. We'll see where we find ourselves here tomorrow afternoon. So a little bit of upward movement, maybe we have some pullback opportunities. A little downward movement, maybe we're breaking below key moving averages on the indexes. Hopefully it's a dull day, but it could be interesting one way or the other tomorrow afternoon when we get together. So we will find out here tomorrow. Of course, we have our cash flow club going on here tonight for our pro members. So you guys enjoy that. Should be a good time. Have fun over there. If you're not a pro member, you know the drill. You are certainly invited to come join us. We can get you hooked up with a 15-day free trial and get you to come see what we're all about. You're also more than welcome to join us in our clubhouse. A bunch of traders over there talking trading. Certainly invite you to join us in the clubhouse. Let's see here. If you are new to the channel, be sure to subscribe and hit the notification bell. Join us over on our Twitter at Tackle Trading. You can find me at Frank Martin 23 as well if you're ever looking for me. You guys know where to find me, but if you are new around here, that's how you find me. So you are all very welcome, guys. It's always a pleasure. Thank you so much for joining me. A lot more fun to do this with you guys than my dog. We have a lot of fun together, but he's not a good trading partner. He usually just wants to get it over with. So thank you so much for joining me. You guys have a great afternoon. Enjoy the Cash Flow Club here tonight. We'll pick up same time and channel here tomorrow as we wrap up another week. Crazy how fast it goes. All right, ladies and gentlemen, get out of here. Have a fantastic afternoon, and I will see you tomorrow.